Hi traders, hope you're all doing well. Thank you for watching my video, which we're going to be covering the fractals indicator. So basically the fractals indicator is a free indicator on most trading platforms. Here I'm using the MT4 platform and we have a euro dollar 1 hour chart. I've applied the fractals indicator to the chart using the default settings. So basically with the fractals, what this indicator does is it helps you to spot support and resistance levels and to decide in which direction you shall be looking to take your trades. Okay, so how I like to use it is it helps assist me with marking the resistance or support levels. So I'll look for key areas on the chart such as this one where you can see we have resistance here and here has been confirmed, it's been touched twice. If you went down, this is a 1 hour chart as I said, but if you went down to the lower chart timeframes, you'd see that price has rejected this level numerous times. The fractal up is there and there. So the fractal is telling us, basically when the fractal is above price, you're going to be looking to sell. When the fractal is below price, you're going to be looking to buy. It's not on every single bar. You just need to look back at the last fractal arrow and decide from there if we are going to be looking to sell or to buy. I wouldn't personally use it just to enter and exit every time the fractal changes position. If you do this, you're just going to get wiped in and out of the markets time and time again. That being said, there will be times where if you did blindly take the signals as they are, e.g. here, when this bar opened and you seen the fractal up there, if you sold, it would have been a fantastic way to get in at the start of this particular downtrend here. However, there will be times where you, if you did that, for example, here, you've seen the fractal below on the previous bar and bought, you probably would have been taken out around here somewhere. So yeah, I like to confirm the signals with further price action analysis, candlestick patterns, my own support and resistance levels, and other technical indicators. So going back to this fractal setup here, I've marked the key resistance level on the chart. Fractals are almost lining up with my resistance level, and then from here on in, when we see price move away from the resistance, is when we are going to be looking to place a sell trade. So fractals above price, the last one. So we can either enter immediately. I mean, you know, you can see here that the price is trying to go back up to the resistance level. It's failed twice. It's perhaps here we may have considered taking an entry there. You can see from the big candle that perhaps a few traders were watching that price level there for potential short trade. Just draw the support levels there. You can see that had a break of the trend line. This wedge pattern here, following from an uptrend, price breaking out below this wedge pattern. I have videos on wedge patterns you can check to help identify this pattern on your charts. So with the fractals, then we're going to look to trade short. There's numerous different ways you can enter on this trade. If you do want to take the fractals signals as we discussed earlier, just as they are, at least you know to just take the short sell trades down here when the fractal changes direction. So basically when the fractal goes above, goes from below to above as it does here and here, there could be a sell there or a sell there, and that would get you in on the trend nicely. Again, if you didn't enter here, you would still have plenty of opportunity to enter around here and even around here. Whilst this would be the ideal entry, there will be times where price will just continue upwards and you'll be taken out. If you've got a tight stop loss, I like to use a tight stop loss just to cut losing trades short and always allow winning trades to run with a favorable risk to reward ratio. Okay, so fractals really help us determine the direction we're going to be trading in, support and resistance levels, and also can be used for entry and exit. Okay, so if we're around here, you could take, as I said, the fractal signals blindly and just sell based on them. You know, downtrend, fractals, let's go. You may be using, you could always use resistance. You could have just marked the resistance level, sorry, the support level here. You can see it's a pullback and just traded the breakout there. Could have placed your stop loss just above here on the fractal level, around 15 pips. And when you see how far price fell, at least 180 odd pips, would have been giving you a really good risk to reward ratio on this particular trade. It's worth mentioning as well, fractals can be used for stop loss areas or for trailing your stop. So for example, if you did get in this trade here, price fell down and you've seen this consolidation around here, as price continued, you may have wanted to move your stop loss to around these fractal levels or just above the resistance for this area here. Same again here. After price drop there, you would have wanted to move your stop loss around this area somewhere. So if price does turn around, you make some profit and you don't let your winning trade turn into a losing one. Also watching the price action, you can see when price starts to do this, it's perhaps a good idea to start taking profits. As you can see, the level of support there is holding and lots of consolidation. Okay, again, you can use technical indicators to help confirm entries. Here we have the MACD. Basically with the MACD, when these bars are below the signal line, we're going to look to sell. When they're above, we're going to look to buy. So in this instance, we have our fractals, we have our downtrend, we have the price coming away from resistance. We know the market's heading down. And then we can see the MACD has a slight pullback here. Goes above the signal line and then it falls back below, which confirms this breakout trade here. You will find that a lot of indicators, all they really do is give you confirmation of what you can see from just looking at the price action on the charts. However, I do understand that some traders prefer the simplicity of reading indicators. Just bear in mind they can be lagging at times. However, they can be good confirmation for trades. In fact, the MACD crossover here would have been helpful to get into this particular trend earlier. Along with the break of that trend line, MACD fell below. You could in fact say there's a level of support here with the fractals 1, 2, 3, 4. There's a decent level of support, as you can see. Price did break through that and then it held up as resistance. There's a limitless amount of ways you can implement fractals into your trading strategies. Just make sure you use other price action analysis and candlestick patterns for confirmation. Other indicators as well, the stochastics here. Stochastic, basically you look to sell when the main line is below the signal line. And ideally the stochastic price is in or around the overbought area, which is 80 and above here. Vice versa, for a buy trade, you look to buy when price is in the oversold zone, 20 and below, which is here, and a cross up. So as we're looking for sell trades in this downtrend, we're going to mark the stochastic crossover near the 80 level. So that happened here, which again coincided nicely with these fractals and the resistance that they formed there. Stochastic saying, okay, let's go short trade. So what I was saying about lagging indicators, you can see the MACD is still not picked up on that until here, but nonetheless, even there, the stochastic was still in agreement. And there'll be times where the MACDs actually can keep you out of trouble. And you can decide just to take trades when all of the indicators and price action agree. Always keep an eye on the candlestick patterns. We have a spinning top here, basically a bearish candlestick pattern in this instance, suggesting that the bears are winning this particular battle after some indecision, and the market is going to fall down as it does. Going back to the stochastic, if you look at the crossover up here in the overbought zone, coincided with that fractal level of resistance. We can see that that would have been a good time to start looking to short again early in on the trade. As I said, there will be times when this will not work and price will just continue going up or going down. If it does go up, had you put your stop loss above resistance, you could have closed the trade for minimal loss and waited for an opportunity to play out like this one did. On the stochastics, I just quickly mention divergence, basically lower highs. See lower high, lower high, lower high. Suggests that we are in a downtrend, and that would have been extra confirmation needed for this particular trade around here. This would have been a strong entry point if you're just the kind of person who wants to wait for confirmation first. We have the breakout of the range, the fractal resistance, clear downtrend, the MACD below zero and approaching below the signal line on a pullback as well. Stochastic agreement, divergence, just a good. The candlestick patterns, just lots going on there to confirm the trade. What's more is the stop loss could have been against the previous high up here or just on the other side of resistance, which would have been relatively tight, between 10 and 20 pips. Okay. What you don't want to do, or what I wouldn't do, you can do what you like. I probably wouldn't look to sell around here just because we've missed the chunk of the move, late to the party. You can use fractals on any trading instrument, so there's no need to jump in on a trade that's not ideal when you can find others elsewhere. Can use them on any chart time frame. This is the 1 hour chart. I prefer 1 hour, 4 hour daily, etc., just because I find the signals tend to be more reliable. That's because there's more price data contained within them. I find 5-minute charts, 50-minute charts can just be a lot of noise, and some big traders and institutions don't tend to follow those as much as the retail traders. Hence the setups, candlestick formations, price action, etc. is not always as reliable. And also, when you can catch big moves like this for a few hundred pips, why would you want to stress yourself out chart watching all day for 10 pips here and 20 pips there, and you'll find it hard to get a good risk to reward ratio with such low targets. But anyway, hopefully you found something useful in this video. We could add literally hundreds of indicators to this chart. They're all going to do similar things. In my opinion, a few, along with price action, support and resistance, and good money management is sufficient enough. Thank you for watching. Please like and subscribe for more.